Hello, friends. If you are over 60 and you have been receiving a state pension for years without ever once checking your official national insurance record on the government's own website, you may want to stop what you are doing right now. Because here is what most people in that situation do not know. Your national insurance record, the record that determines every penny of your state pension, was not built by you. It was built from employer submissions going back decades. Many of those submissions were filed on paper. Clerical errors happen. Employers make mistakes entering national insurance numbers. Sometimes contributions simply do not match to the right person's record. And when that happens, your pension is calculated on a lower number than it should be, permanently. The Department for Work and Pensions will not phone you. Nobody flags it. The number arriving in your account every 4 weeks is not necessarily the number you earned. This is not a conspiracy. It is a paperwork problem, a genuinely common one. And you can check whether it affected you in about 5 minutes. There are actually 2 separate reasons this can happen. One affects anyone born before 1960. The other specifically affects women who retired under the old pension system before April 2016. We are going to cover both. And the second one involves an official DWP correction exercise still running with a deadline most people in that group have never heard of. Quick context before we get into this. This video is made for people in the UK born before 1960 who are receiving the state pension or approaching state pension age. The goal is to explain how national insurance record errors happen, how to check your own record using the government's official tools, and what the correction process looks like. Everything here comes from publicly available official information. The Department for Work and Pensions, His Majesty's Revenue and Customs, and the UK government's official website, and I will name each source as we go. This is educational content only. It is not personalized pension, financial, or legal advice. And nothing here is a promise that your record contains an error or that you will receive any specific payment. Everyone's situation is different, so before any major decision, please speak to a qualified pension advisor who knows your circumstances. Now let us get into what actually matters. We are counting down 5 things everyone in this situation needs to understand, in scrambled order, because the most important one is last. Before we start, how many of you have ever actually logged into your personal tax account on the government's website and looked at your national insurance record year by year? Drop a yes or no in the comments. That question matters. Number 5. Your national insurance record is built on data you never saw submitted. The Department for Work and Pensions calculates your state pension based on the number of qualifying years on your national insurance record. You need 35 qualifying years to receive the full new state pension, which from April 2026 stands at £241.30 a week, confirmed in official government pension rates for 2026 to 2027. Every year you fall short of 35 reduces your weekly payment by approximately £6.89 permanently. That is around £358 a year. Over a 20-year retirement, one single missing qualifying year costs more than £7,000. Pause this and write that down. £6.89 a week per missing year. Permanently for life. Now here is where the problem starts. Every qualifying year depends on earnings and contributions data submitted by your employers, sometimes going back to the 1970s. Those records were filed on paper, entered manually. Companies made clerical errors. National insurance numbers were transposed. Employers went out of business before corrections could be filed. If even 1 year of your working life failed to match correctly to your record, your state pension has been permanently lower, and nothing in the system alerts you to this. Number 3, how to check your record and what to do if you find a gap. Pause this and write this down. Personal tax account, the UK government's official website. That is where your national insurance record lives. Once you are in, you can see every tax year going back to when you first started working, with each year marked as either a full qualifying year or not full. You are looking for any year marked as not full where you know you were working. If you find one, here is what to gather. P60 forms. The year-end summaries your employer gave you showing total earnings and national insurance deducted. Old payslips work too. Bank statements showing regular salary payments from that period can also support your case. You do not need 40 years of records. 2 or 3 years of documentation covering the gap is enough to open a correction request with His Majesty's Revenue and Customs. Contact HMRC's National Insurance Contributions Office. Explain which years you believe are wrong and why, and send copies of your evidence. HMRC is required to investigate. If they confirm the error, they update your record and the Department for Work and Pensions recalculates your state pension going forward. If you are a woman watching this who retired before April 2016, drop a comment below. You may well fall into the group the DWP correction exercise specifically covers, and we are getting to that shortly. Number 1. What to expect after you make contact. His Majesty's Revenue and Customs is required to investigate. The timeline varies, but the process is real and corrections do happen. If the error is confirmed and you are already claiming the underpayment since your claim date is paid as a backdated lump sum, what if the employer no longer exists? HMRC can often investigate historic contributions independently using their own records. Providing whatever documentation you have makes the process faster. But the absence of a complete file does not make a correction impossible. And one thing videos on this topic often leave out: years when you were receiving certain benefits, including unemployment credits, can also count as qualifying years. If your gap falls during a period when you were claiming, national insurance credits may have been awarded automatically. Worth checking before you assume you have a genuine gap. Now let me tell you about Brian, a retired factory worker, and an illustrative composite drawn from the kind of cases His Majesty's Revenue and Customs handles regularly. Brian had been collecting his state pension for 7 years. The same amount arrived every 4 weeks. He never questioned it. Then his daughter, who works in payroll, sat down with him one afternoon and pulled up his national insurance record on the government's official website. She found the problem in about 5 minutes. 4 years in the late 1980s were showing as gaps, not full qualifying years, even though Brian had been in full-time work throughout that entire period. He still had his old paperwork in a folder in the spare bedroom. They contacted His Majesty's Revenue and Customs with the evidence. The records were corrected. His pension went up by about £27 a week. And because the error had affected his pension since the day he claimed, he received a backdated payment covering the full period. Brian's situation is not unusual. The reason it keeps happening is the same every time nobody told him to check. Number 4. Why the practical window for acting matters more than the legal one. His Majesty's Revenue and Customs can investigate genuine errors regardless of when they occurred. There is no hard legal deadline for reporting a mistake in your national insurance record, but there is a practical one. Old P60 forms in a drawer are easier to locate than P60 forms in a loft that has not been opened in 15 years. The longer you wait, the more likely it is that documents get lost, damaged, or discarded in a house move. The window to act is not legally closed. But the window where you can still put your hands on the proof gets narrower every year. And now, number 2. The most important item in this video, and the one that affects a specific group of women who may have no idea they are involved. For women born before the 6th of April 1953, those who retired under the old state pension system, there is a separate documented calculation error that has nothing to do with gaps in their own employment record. The Department for Work and Pensions computer systems failed for decades to automatically apply pension uplifts that married women and widows were legally entitled to receive. Women who retired before April 2016 were in many cases entitled to have their pension increased based on their husband's national insurance record. The computers were supposed to do this automatically. In tens of thousands of cases, they did not. The Department for Work and Pensions has officially acknowledged this. Between January 2021 and March 2025, the DWP identified 130,948 separate underpayments totaling over £800 million. The average correction for married women has been approximately £5,553. For widows, over £11,700. These are official Department for Work and Pensions published figures. The correction exercise continues until March 2027. The DWP has confirmed it has completed the majority of its automatic reviews and is now waiting for people to come forward, particularly women whose husbands reach state pension age before the 17th of March. 2008. Pause this and write this down. The group most likely to be affected: women born before the 6th of April, 1953, whose husbands reached state pension age before the 17th of March, 2008. If that is you, contact the Pension Service. The contact details are listed on the UK government's official website and ask specifically whether an uplift based on your husband's national insurance record has ever been applied. State that clearly when you call. Has anyone here already been through the correction process? Tell the rest of the community in the comments what the experience was like. Your account helps everyone else know what to expect. There are two separate reasons your state pension might be smaller than it should be. One is a gap in your own national insurance record. You find it. Raise it with His Majesty's Revenue and Customs, send your evidence, and HMRC is required to investigate. The other is a DWP calculation error. The computers were supposed to perform automatically, and that correction exercise closes in March 2027. 3 things to do before you close this video. 3. Log in to your personal tax account on the UK government's official website today and look at your national insurance record. Every tax year is listed. It takes about 5 minutes. 2. If you find a gap, start gathering your P60 forms, payslips, or bank statements from that period. You do not need a complete file. Start with what you have. 1. Speak to a qualified pension advisor before making any formal complaint or decision. The rules around national insurance credits and contracting out are complex, and a professional who can look at your actual record will give you guidance that a video cannot. Share this with one person you know who was born before 1960 and is collecting the state pension right now. One conversation could take 5 minutes, and if the record has even a single missing year, it could mean more than £358 added back to their pension permanently every year. One of the most common questions in the comments is what to do when you find a gap and the employer no longer exists. We have a video on that coming up next. And if you want to understand voluntary national insurance contributions, how to buy back missing years, and whether the numbers work out that one is linked at the end as well,